Corporate tax exemption for qualifying investment funds in the UAE, requirements and conditions. The UAE has established itself as a prominent global hub for asset and wealth management, offering a diverse range of investment fund regimes and vehicles tailored to meet the varying needs of fund managers and investors. Whether serving institutional investors, high net worth individuals, or retail clients, the UAE's investment environment supports a wide array of structures, making it a sought-after destination for collective investment schemes. Within this dynamic framework, the UAE's corporate tax law seeks to provide tax neutrality for investment funds, ensuring that investors remain in a tax position similar to what they would experience had they invested directly in the underlying assets. Recognizing this critical principle, the law enables qualifying investment funds to apply for a corporate tax exemption through the Federal Tax Authority, FTA. What constitutes an investment fund? An investment fund is a contractual arrangement or legal entity established primarily to pool investor funds and channel these resources into investments aligned with a clearly defined investment policy. The nature and structure of these funds can vary widely, but all share a common purpose: to collectively manage and grow investors' capital within a structured framework. Examples of investment fund structures include mutual funds, hedge funds, exchange-traded funds, ETFs, real estate investment trusts, REITs, private equity funds, and venture capital funds. Tax neutrality for investment funds. The corporate tax loss approach to investment funds aims to maintain a neutral tax stance, ensuring that the act of pooling funds does not subject investors vehicle domestic or international to additional tax burdens compared to what they would encounter by investing directly. This neutrality supports the attractiveness of the UAE's investment market, encouraging fund growth and broad participation by mitigating unnecessary tax costs. Conditions for exemption from corporate tax. Investment funds seeking exemption from corporate tax as qualifying investment funds must demonstrate that they meet stringent criteria outlined by the corporate tax law and accompanying regulations. The following conditions must be fulfilled for a fund to be eligible for this tax exemption. 1. Regulatory oversight. The investment fund, or the manager overseeing the fund's operations, must be subject to appropriate regulatory oversight by a competent authority. This oversight can be carried out by an authority within the UAE or a recognized foreign regulatory body. The requirement for regulatory oversight ensures that investment funds operate within an established legal framework, providing transparency and accountability in the interests of investors and market integrity. 2. Trading and marketing conditions. To qualify for the corporate tax exemption, the investment fund must meet one of the following conditions related to its market presence. Trading on a recognized stock exchange. Interests in the fund, example, shares, units, must be traded on a recognized stock exchange, making the fund accessible to a broad base of potential investors through an established market. Sufficiently wide marketing and availability. Alternatively, if the fund is not traded on a recognized exchange, it must be marketed and made available widely enough to investors to demonstrate that it operates as a genuine collective investment vehicle and not as a private arrangement with limited access. 3. Primary purpose not for corporate tax avoidance. The principal or main purpose of establishing and operating the investment fund must not be to avoid corporate tax. This condition ensures that the exemption is granted only to funds with legitimate business and investment purposes and not to entities structured primarily as vehicles for circumventing tax obligations. Additional conditions for different types of investment funds. It is important to note that depending on the specific type of investment fund, there may be additional conditions that must be met. These conditions are detailed in Cabinet Decision No. 81 of 2023 on conditions for qualifying investment funds. The decision provides further guidelines and requirements tailored to different types of funds to ensure compliance and maintain tax neutrality while preventing misuse of the exemption provisions. Applying for corporate tax exemption. Investment funds that believe they meet the relevant conditions may submit an application to the FTA for exemption from corporate tax. The application process involves demonstrating compliance with all prescribed conditions and providing supporting documentation as necessary. Upon approval by the FTA, the investment fund will be granted qualifying investment fund status, exempting it from corporate tax obligations and allowing it to operate under the favorable tax neutrality framework envisioned by the UAE's investment policies.